Prioritizing financial goals is important since less stress and better finances go hand in hand. Before starting the video, please do not forget to like, share, subscribe and press the bell icon. The following financial objectives must be met in 2023. 1. Budgeting first. The first step in achieving your financial objectives is to take this action. You cannot manage your money further to choose how much to invest and save for a more secure future unless you have a budget in mind. Make a note of all your important expenditures, such as rent, insurance premiums, ME payments for a loan, frequent miscellaneous costs, travel expenses, etc., to get started. Then make a list of the unnecessary expenses you can live without. You can evaluate your spending more accurately as a result. It will be simple to identify your financial objectives and get started on achieving them now that you are aware of how much money you now have and how much more you need to save. While some experts advise utilizing apps to monitor spending, others advise using an Excel sheet. It could be challenging to maintain this tracking practice on a regular basis. As an alternative, you can divide your monthly income into 3 separate buckets for spending, saving, and investing. This will guarantee that you maintain your spending and saving routines without going too far. 2. Establish an emergency fund. When was the last time you made sure you had enough money set aside to cover any emergencies? You absolutely need to have an emergency fund to cover any unforeseen bills. This could be anything from having to pay unexpected medical bills to having to pay for things that were previously ignored. Few people are aware of the need of having a contingency fund with enough money in it to last them for the next 6 to 12 months. This does not imply that you must deposit all of your funds into the fund at once, though. Take things gradually. Every month, set aside a certain portion of your income for this fund. You can achieve this by opening a recurring deposit account or depositing a set sum in fixed deposits each month. Doing so will provide you access to funds when necessary and allow you to keep earning a modest interest rate on your assets. An emergency fund is meant to safeguard your finances against significant setbacks and to enable you to continue living comfortably even during a downturn in the economy. 3. Get coverage. If you haven't already, begin the new year by purchasing a term insurance plan, then a suitable health insurance policy, to cover the costs of your family's medical needs, including hospitalization and subsequent treatment. Check the required level of coverage, or else determine the level based on some easy rules of thumb that ask you to choose an amount equal to 10 to 12 times your annual income package. Srujan Financial Services LLP founder partner Deepali Sen said, "For newcomers, it is crucial to start the journey with simplicity and clarity. A term plan can be used to get life insurance. The quantity should equal the sum of the present values of all the goals, liabilities, and available assets. All upcoming goals for oneself and dependents, both junior and senior, must be taken into account, including children's higher education costs, parents' expenses and medical bills if they are dependents, the balance of a mortgage, the costs of the children and wife's maintenance until the children can support themselves. A unit-linked insurance plan, ULIP, should not be taken out. Retirement age may be the duration of the term plan. Based on the needs and medical history of oneself and any dependents, one must determine the appropriate level of coverage for health insurance. Additionally, the term plan may include riders for supplementary insurance owing to critical sickness and accidental death riders. 4. Paying off credit card debt. Never undervalue a debt of any type. One never knows when a short-term debt will balloon into a long-term obligation without their knowledge. Every free man's enemy, debt can drag the gullible into a life of servitude. It's critical to comprehend how much of your income goes towards paying back your loans. Again, this will serve as a reminder of how much more you are paying in interest and the necessity to start prepaying your loan in order to avoid incurring more interest costs. An honest assessment of your debt and income will enable you to plan your payout well in advance, but it may temporarily deplete your resources. However, over time, you will save more money by engaging in this practice. 5. Retirement preparation. Retirement is like a protracted vacation that produces enough income to support oneself. You may feel that you have a long way to go before you can start thinking about retirement because you are young and active. Fact check. You'll quickly come to regret not making an early plan for your retirement since time flies. It will take time to accumulate a sufficient corpus to safeguard your later years. Therefore you must start making retirement plans now. Retirement is also inevitable, according to Muthukrishnan, a qualified financial planner with offices in Chennai. It's never too early to begin retirement planning, so you might as well start in 2023. Decide when you want to retire first. After deciding when to retire, the next step is figuring out how to do it. Depending on your age, health, family, goals, lifestyle, etc., it would include a lot of steps. You'll have a long voyage, therefore you need experienced advice. Begin now for 2023. Early retirement planning can go a long way towards helping you build the corpus you desire or guarantee a fixed pension each month. You should also picture the kind of life you want to have after retiring. This will enable you to estimate how much money you would need to support your lifestyle. A well-thought-out retirement strategy can assist you in realizing the amount you must invest each month to secure ongoing investment, allowing you to live out your golden years. Choose an appropriate asset allocation. You simply do not decide to invest in stocks when you wake up. More significantly, you must avoid investing haphazardly in stocks and ETFs without understanding your risk tolerance, financial objectives, and short and long-term cash requirements. Financial planning also entails deciding how much money to invest in various assets, such as stocks, bonds, gold, real estate, and more. List your financial needs at various life phases, such as marriage, children's higher education, purchasing a property, etc., to determine where you should invest your money. Then, align your investment planning with these objectives. Set deadlines for them and adjust your investing plans accordingly. Your income should be split into two parts, an investment portion and a portion for other costs. By doing this, you can strike a balance between living for today and saving for tomorrow. FinWise Personal Finance Solutions founder Pratibha Girish stated, "Asset allocation completely depends on goals for which one is saving. Your asset allocation should prefer debt if you are saving for short-term objectives because equity may be volatile in the short run. For long-term, 7 years or more, goals, the emphasis should be more on equity." 7. Choosing to study finance. Whether you have a degree in finance or not has no bearing on how successful you will be in making financial decisions. Regardless of the industry you work in, managing your finances for a more secure future requires an awareness of the complexities of finance. A crucial yet undervalued life skill is financial literacy. A first aid kit, that is. It might not be simple to read at first, so you must persevere to comprehend this topic and how it can benefit you. If you can't, you can always find a reputable financial counselor whose perspective on money is similar to yours. One size does not fit all when it comes to finance, which is an issue. Each boat is rowed by an individual. Blindly following others can only harm your ability to make and amass good money. Decide what suits you the most, then follow it. Like, share, subscribe, comment, and do not forget to press the bell icon.